Exactly. So if you haven't heard, we finally gave this place a name. We're calling it the Fire Center now. So welcome. It's still the home of the club, so the home of IEREIC. We're still IEREIC. Some people ask me, like, are we changing the name of the club? Absolutely not. Okay, we're going to be IEREIC for a long, long time. Okay, we just changed the name of the event center. Okay, so we do, and thanks to a lot of our sponsors here for helping us fund this event center, and we do appreciate them. If you're a sponsor, please raise your hand. All right, let's give these guys a round of applause. So all of our sponsors are members first. We don't let anybody just walk in the door and say, I want to sponsor, as much as I would really appreciate the money. We do have a little bit of morals here. So all of our sponsors are members first. We make sure that they're cool people before we let them put their name up on the board. And all of our sponsors, like I said, we've done business with, or they've been around a long time. So all we ask is that if you are in need of their services, go to the website, give them a call, and give them a shot first before you call somebody else, okay? And see if they can help you out. They'd appreciate it, and so would we. And if you do call them, let them know you're from the club, please. Thank you. I do have a podcast. Who's watched the podcast? All right, cool. Thank you. I have no guests lined up for this year, so bless you. Who was that? Ricardo. I desperately need some guests here to get some new content going. So if you have thought about coming on the podcast, go to firechatpodcast.com. You can look up my schedule and schedule yourself. Or what's going to be really easy now is you can come. We have a few hours before Fire Focus every Wednesday after Exchangers, and we can just pop in there and do a podcast real quick too. So I think we've got about 30 episodes on there, and it's really helping grow the YouTube channel. So I want to keep it going. And if you have a podcast of your own and you want to have me on it, reach out as well. I'm willing to do that too. So let's see what else here. Exchangers. Who was at Exchangers earlier today? All right. Looks like real estate day is working. Sounds good. All right. So we moved Exchangers to Wednesday. For those of you who haven't heard yet, so now every Wednesday is basically real estate day here at the Fire Center, from basically 12 o'clock until 8 o'clock tonight. So you're welcome to come to Exchangers at 12, make some deals, finalize them, and hang out until Fire Focus later. And we didn't make a change to Exchangers, where basically we're doing a guest pass. So if you're not a member, you can come to the meeting one time. And if you like what you see, you need to become a member to come back. Okay? And we have a couple new events coming up, or we've kind of rebranded some of them. So we cleaned up the schedule a lot, and I'll jump ahead here a little bit so you can look at this. If you haven't heard, we've kind of reorganized the events. So we basically made Fire Focus every single Wednesday. Okay, so the focus group events are now happening every Wednesday from 6 to 8. It makes the schedule really easy. The first, second, and third Wednesdays are staying the same as what they were last year. We've added a fourth event on the fourth Wednesday. That'll now be Fire Focus Mindset, and I'll be leading that one. And then we changed Tribe Building to the fifth Wednesday of the month. Okay, we're still calling it Tribe Building. We just put Fire Focus in the middle of it, or in the front of it. So that's what that is. So the random months that there are fifth Wednesdays in the month, that's when we will be doing Tribe Building. Okay, the first one of that is this fifth Wednesday. So January. Somebody help me out here. The last one. Thank you. 31st. So, for those of you who just became members, you get a bonus event this month. All right? So, I'm not sure if we'll do speed building at that, or speed networking at that one, but it is going to be focused on networking every fifth Wednesday. Okay? And let me go back one. Nope, that's it. So, if you want to take a picture of that, real quick. Also, we are doing, if you are interested, you can rent out this center for your own event, as long as it doesn't conflict with something that the club has going on. So for you agents out there that your offices need, some presentation space or whatnot, come find me. It starts at $750 a day, and there's different packages on whatever you need, okay? Anywhere from if you need filming or, extra microphones or somebody to run food or whatever it is. Just come talk to me. You go to iefirecenter.com and it'll give you the breakdown of that stuff as well. All righty. So with that, let me introduce Miss Fairlane here. You can come on up. Let's give her a round of applause.
Thank you, everyone, for coming tonight. How was everyone's New Year? Good, good. I'm really excited for the upcoming year. I'm actually in the Fire Fast class, so I'm really excited for 2024, which official announcement is sold out. So thank you, everyone that is in that. And anyway, and speaking of thank yous, if you are a volunteer, please stand up. Please stand up. Volunteers, come here real quick. Just stand right here. I just want to, thank you to each and every one of you for showing up and just contributing, because this is a really hard job by myself. And I know plenty of you have seen me running around here like a chicken with my head cut off. And because of you guys, I actually have a little room to breathe. So thank you so much to all the volunteers. Thank you. Thank you. Yeah. And having said that, I do need more. So we have about 15. I would like to get it to good, solid 25. Everyone that has been coming, thank you so much. You guys have been super valuable and dependable. So that's huge. So thank you. And Lupe here earlier, she just like cleaned this whole entire place. So it's spick and span. And Yesenia and Josh were doing some detailed cleaning. So, it's just little things, but it makes it nice and shiny for the rest of us. So thank you. And thank you, Chris, yeah. And if you are interested, just send me an email at the club. It's thrive@iereic.org. It's basically the same email. You get all the emails from the club from, and just put volunteer in the subject line, and we can get you added to that and part of the team. So, and then tonight, I'm really excited because how many of you have not bought a deal because you're like, oh, where am I going to get the money? Right? Oh my gosh, I'm still kind of there. Like there's times where I'm like, okay, I could get 20,000, but if I need 200,000, where am I going to get that money, right? So I wanted to bring, I'll bring you up in a second, so I didn't want you to get up right now. But I wanted to bring up a couple people that have really helped people in the club, and they have taught people things, and they really want to help people here thrive and get deals. So we're going to start with Steve. He's one of our sponsors, and then he'll talk about what he does and stuff that, you'll see. I'm going to let him say that. And then Goodwin is also going to get up, and he's going to speak on his end of things, like on what he looks for as a lender and things like that. So and then they'll talk about something that they did together and how you can kind of join forces with other people in different spaces. So, having said that, I'll bring up Steve to the front. Give him a round of applause, too.
See everybody tonight. Wow, this is a great crowd. How many of you came to just listen to me? Raise your hand. Wow.
Yeah, here, I can hold these for you. You want me to pass them out?
Yeah, if anybody doesn't have my newsletter or maybe doesn't have a current calendar, go ahead and pick one up. Now, how many of you came here to listen to Goodwin? Okay, right on. Sounds good. So, tonight, I'm going to be talking about private money loans, and if I have time, I'll talk a little bit about DSCR loans and what those are. Before I get into that, I want to talk to you about my background. Some of you may not know that much about me. So I was born in Minnesota in the Midwest, and we came out here to California, settled in Anaheim for a long, long time. And I was going, to school. I actually wanted to get into the healthcare industry. I didn't know if I was going to be a dentist or a chiropractor. And then after going to college for a while, it's like, oh my God, I don't think I want to do this. I want to do something else. I'm tired of school, things like that. So a friend of mine, he was flipping cars. So I watched him flip cars, and I started flipping cars while I was in school. And I got pretty good at it. I was flipping like these old VW Bugs, and before Nissan was Datsun B210s. Anybody remember those cars? Okay. Toyota Coronas, Toyota Corollas. The first car I flipped, I made a whole $50 on it. You know, your first deal, you don't always make that much money, whether it's in real estate, cars, whatever. And then I graduated. I started getting into higher-end automotives, sports cars, classic cars, antique cars, mainly Corvettes, 55 to 57 T-Birds, old Camaros, old Chevelles. So I did that for a number of years. I'd go to Vegas, Arizona, all over California at a truck and trailer, would pick a car up, you know, when the cars were fairly cheap, bring them back here, rehab them, and sell them. Well, I did that for a number of years, and then what happened, I had an employee, and I always carried a lot of cash with me to buy these cars because I never know where I'd be at. And he had set me up. I was kidnapped at gunpoint, and they took all my money. They took, you know, the car I was driving, things like that. So after that, I basically just laid low for like a year. You know, it took a little time for me to recover. And I said, you know, I don't think I want to do this anymore. So, you know, and I stopped carrying large amounts of cash, things like that. So afterwards, the friend that taught me about car flipping, he opened up a smog shop. So I started getting involved with smog repair. If any of you remember the old Hamilton test systems, we would open up smog shops next to those Hamilton test systems where you'd have to go to get your car smog. So did that, you know, for a few years, and then I got really, really sick. Went to the doctor, and the doctor said, you know, you're working on these old cars, because I worked on them myself, and the cars from like the 70s, they had a lot of pollution, and so from breathing in all the fumes, I got really sick. I actually had to take a year off of work, you know, to recover. And during that time, I said, you know, I'm going to focus on something different. So what did I do? I went from flipping cars and then doing smog to I got into commercial properties, mainly gas stations and some little shopping centers. So I started flipping gas stations, fixing these old abandoned stations up, remodeling them, put a business up, sell the business, and then keep the property, then flip the property later. So I was doing that in like little shopping centers, and this was when I could buy, you know, these commercial properties for $100,000, a little more. The most I think I spent like $275 for a shopping center, you know, and I flip it, I'd make $50,000, and I thought, wow, this is fantastic. So when I was doing that, I said, you know what, I want to do some lending. So I started getting into private lending on the commercial side, and I started doing that, and that was working out, you know, pretty good for me. And then later on, I started doing the residential lending, you know, got licensed, and here I am so many years later. So, you know, I've been a club member for a while now, sponsor. I've helped a number of people in the club with their investments. I was talking to one of my clients today who, it was the first deal I did with a club member, and Goodwin and I helped him buy a property. It wasn't a flip, he's keeping the property, and it was in Northern California. He bought this house on an acre of land for $75,000, or I'm sorry, it was $100,000, and I loaned him $75,000. It had a tenant on there, and we did an appraisal of the property, and the property appraised for $200,000. So pretty good deal there. He bought it for $100,000. It's worth $200,000. It was an off-market deal, and he even wholesaled another property before that. It was multi-unit close by this property, and this is up in Placerville, believe it or not. I never even knew where that was. So he bought, he did a wholesale deal on a property close by. He made, I think, 25 or 15,000, whatever, on the wholesale deal, because he didn't have a lot of extra money, and he took that and he used that as a down payment, and then Goodwin helped him with the closing costs, and he got into his first deal. So for those of you who think you got to have millions of dollars to get into your first flip, and this guy, he's a teacher, so just kind of a regular guy, and he made this happen, and now has plans to build a big house on the property, because the house that's there, it's small. It's about 700 square feet or so. So it is possible. And he came to me and he says, hey, can you help me? And I looked at the deal. I said, yeah, I'm going to help you. And if I like the story and I like the person, I'm going to go, all out to make it happen for you. So again, if you want to do something, and even if you need just consulting, come to us, Goodwin, myself, any of the other people here. We're happy to help you and get you started. And again, you might not make $1 million in your first deal, but you might. I had somebody in our office that was afraid. They're realtors. They were afraid to do anything, and they had listed this property in Long Beach, kind of a fixer-upper, and I said, you know what? You should buy that property for yourself and flip it. Oh, no. That's too scary. It's $700,000, and we don't have any money anyway. And I said, well, why don't you look into it? And so I kept pestering him about it and pestering him. And finally, I got him to come to the club. And so they came to the club for the first time, and they thought, well, this is pretty cool. And after another couple of weeks, they went ahead and they bought the property, a $700,000 property. How did they buy it? They got the seller to carry almost the whole loan. The seller let them put $25,000 down. Okay, not a lot of money, but he just, he had a lot of problems. His kids were living on the property, and you hear, if you come to the meetings, you hear all the stories, and it is possible. So the seller he wanted out, so he said, okay, I'll sell it to you for $700,000, and so they took his loan of $675,000. They went ahead and they used their own funds. They fixed up the house. They staged it. They had never done this before, ever, and they really didn't want to do it. They were just scared. They'd come to me and say, what should we do? What should we do? I said, just do the deal. I said, if you don't buy that house, I'll buy it. And so finally they did buy it. They fixed it up, and they sold it a few months later. You know what they sold that house for? And this was like less than a year ago. $1.25 million, okay? So that was their first flip, and if I hadn't pushed them, they wouldn't have done the deal. And they would have made their, it would have been a decent commission, for those realtors out in the audience. But imagine the difference between $1.25 million sale on a $700,000 purchase versus just their regular real estate commission. So now, no, they didn't. I'm just hoping to get a loan out of them. But it's okay. I mean, I've helped so many people. I mean, club members, non-club members, people that were losing their home. I mean, I had a man, he was like 80 years old. I was able to get him a loan. He was like, just weeks away from foreclosure, and we got him approved. We closed like just days before the foreclosure sale, and this man, he was crying. I mean, he didn't know how I could help him. He just thought there's no way he's going to be able to keep this home. And so it's things like that. When you meet somebody, you help somebody, and they're so thankful, and then hopefully it leads to more business. But we can all, I think, attribute it to it, if we're in the industry. And we're all educators here. I listen. I mean, I have mentors in the club. I don't, know that much about house flipping, things like that. I'm a lender, but I'm always learning. And so, I haven't done any flips in, many, many years, but the people here are all inspirations to me because I've listened to them. I come to all the meetings. I take the classes. I take notes, and it's a great learning experience. And for all of you people, that have just joined and it's your first time or second time here, congrats for taking this first step. Because, and another thing, if it wasn't for Rich here, we wouldn't have any of this. I mean, literally, yeah, give him a round of applause. I mean, for those of you who were here, let's say even a year ago, look at how much better the club looks today than it did then. And I mean, and Rich, I mean, he devotes so much time into this place. Nobody's paying him to do this. And it's, yeah, exactly. And when he asked me to be a sponsor, I'm thinking, yeah, I'll be a sponsor because, and not only that, I use the services of the other sponsors. For Inspire Escrow, she does a lot of my escrows, and the only reason being, she's also a sponsor. So I had another escrow company. They don't, I had done 100 escrows with them. What did I get out of it? Absolutely nothing. And even the service wasn't that great. So I use Inspire, whenever I can. They do a really great job. So any of you people that, this is a good thing about them, their prices are good, the service is good. Consider them, when you're going to open an escrow. So without further ado, let me get started. So again, we're we're going to talk about, I know I got off track a little bit, but I wanted to tell you a little bit about, my background and everything. So anyway, so private money loans. So what are private money loans? Does anybody here not know what a private money loan is? Okay. Oh, put your hand down. Anybody else? Okay, you're new here. This is your first time. Great. So basically, a private money loan is a loan made outside of a bank or an institution. They are typically made by individuals who either use their own personal funds or use the funds of other individuals to create a note secured by real estate. Does anybody understand what that means? So basically, I act as the bank. So what we do in our situation is we raise funds. We manage millions of dollars. People with funds in either an IRA, it has to be a self-directed IRA, or they just have money in a bank account, or maybe it's in the stock market, it's not doing well. So I take their money, I always put some of my own money into a deal, because I always tell people, I'm not going to have you invest in anything that I'm not, personally invested with you. So we take the money, depending on how many people, how big the loan is, and then, we do a regular escrow, we get a regular title policy, we get an appraisal, and, once we do that, we review the information from the borrower, and then we make them a loan. I mean, it's a recorded loan, just as if we were the bank. We do all the same items and same due diligence, although we do it a lot faster, a lot quicker, and not asking for every little bit of paperwork like a bank would. But we'll act quickly, and a lot of times we're even cheaper than a bank, and even sometimes our rates end up being lower than a bank. So we'll make the borrower the loan. We service the loan ourselves. We don't sell any loans. We keep all the loans in-house. And then I work for Peak Finance Company. We own our own foreclosure company. So if there's any problems, we would handle the foreclosure. And so the people that invest with us, they just basically collect checks, from us. So, and their name and their information is recorded on the trust deed, so they're protected that way. So that's basically the difference between a bank, and we're a direct lender at Peak Finance. So, and we have our own credit line. So we use money from the credit line. We'll fund, if it's a traditional loan, conventional, FHA, whatever, we'll fund the loan, and then we'll sell it in the secondary market. But the private money, we service that separately, and then collect all the payments, make sure the taxes are paid, insurance, everything like that. And if somebody's not paying, then, we'll send out the notices. And if we ever had to, we'll handle the foreclosure. But thankfully, our portfolio is pretty much at almost 100%. So as far as paying and everything like that. So it's worked out well. And this year, I'm actually 50% of my loan volume was from referrals from the club or club members. And a lot of them are small loans. I'd say the average size loan I've done this year is $50,000. So sometimes it's very hard to go to a bank because of the laws and get, let's say, a $50,000 loan, because you can't really charge anything because the fees would be too high. So I don't want club members getting discouraged and not getting a loan because, well, I can do this deal, but I need 50 grand, I don't have it. They come to me, I'll look at the deal, okay, fine, we make them the loan, and that way they don't have to go through all the rigmarole at the bank, and we give them their money. So moving on. Okay, why would you want to do a private money loan? Okay, private money loans, they can be beneficial over a bank or institutional loan because they can typically overcome certain criteria with the transaction, like property condition. I just closed a loan for a club member. She wanted to get some cash out. It was over $500,000 cash out. It was a lot of money. And we looked at the house, we did an appraisal. The inside was pretty much gutted. Okay, so she paid cash for the house. She's a contractor, but the inside, was just, it wasn't finished. Guess what? If you go to a bank, what's a bank going to do once they see the inside of the house? Yeah, they're going to turn it down. Okay, so it's like I look at it, I look at the person, I look at their ability to make the payment, and I look at the equity that they still have invested in the property, which was still significant. So, we closed it right away for them, and, they're very happy. We give them some really good terms. So in that case, you have a property with, not normally lendable condition, and we helped him out and got that deal closed. And then other things like the speed of the process of the loan, we try and, I've closed deals in as little as 11 days. Documentation of borrower's income, credit of borrower, sourcing of assets, cross-collateral of other properties in case where there is not sufficient equity in a subject property. Does anybody know what cross-collateral is? You know? Okay. Anybody not know? Okay. So basically, cross-collateral is something we could do in private money where if somebody doesn't have enough equity in one property, but they own a second property, we'll use both properties as collateral to make a loan on that one property. So we put the lien on two separate properties, but at least it overcomes their lack of equity. And we might have to do 3 properties if they have only a little equity in each property. So we've done things like that. We had a borrower with, does people know what a FICO score is? Okay, most people know about that. If you had a 499 FICO score, is that a good or a bad score? Okay, that's pretty bad. 800's really, really good. You get in the 4s, it's really, really bad. Well, these people came to me. They owned an apartment building out by Huntington Park. It's 4 units. It's all rented out, good equity. If they had gone to a bank, even though there's equity in the property, do you think the bank would make them a loan? Anybody think that the bank would make them a loan? Not a cheap loan, right? No, most likely they turn them down because the banks have their criteria and they say, no, you got to be at, let's say, 650 or 680, 700. We looked at the deal and says, when do you want the money? The property appraised for like $1 million. We gave them $200,000. That's a 20% loan to value. Who out there thinks that's a safe loan to make? Anybody? Okay, yeah, because the credit was bad, income, a little shaky, but the collateral's there, and they're not. I'll be honest, they're not the best payers. They pay late and things like that. They don't pay their taxes on time. We have to remind them, but you know what? They always end up paying because they have 4 good paying tenants, and even though I don't know what they're doing with all the money, but they're spending it other places, but we end up getting paid, in the end. So as long as they're paying us, that's all, honestly, that's all what it's all about. So again, a good loan, yes. Yeah. We do to a point, and we looked at, and we ask them questions, and I go on all the doc signings because I want to interview the people and get to know them a little better. And honestly, when people have 400 and 500 credit scores, most of the time they're just bad at managing their money. Okay, I'll be honest. It's sometimes they have a situation, there's a divorce or there's a death in the family, or they lose a job and things like that. But more or less, people with bad credit tend to always have bad credit. I had a good friend of mine, he had credit in the 500s, and the guy was wealthier than you can imagine, and I've done a lot of loans for him. And you know what his reasoning for not paying a bill on time? He had an American Express card. The bill would be like $20. I'd say, why are you late on this $20 payment? he makes over $500,000 a year, okay? He owns his own business. What's the reason? Well, it's such a small amount. I didn't think American Express would care about a $20, payment. Look at, if the bill was $1,000, I could understand, but I figure I'll just wait till next month. Then I'll owe $40 and I'll pay it then. I mean, and this was a well-educated man. He had 100 employees, and I had to teach him, you know what? You can't be like that. Even if it's a $10 bill, you have to pay it on time. So I spent, and I don't do this anymore, but for him, I repaired his credit. It took me a year to fix his terrible credit. I didn't charge him anything for it, and I got him up to 700 plus because he wanted to get a multi-million-dollar commercial loan, and he wanted, he didn't want private money. He wanted the best deal out there. So I worked on his credit, got it up. We got his loan done, okay? Everything was fine for a while. Guess what happened a year later? He had a personal loan with Bank of America for $1.5 million. And Bank of America, the note came due, and they wanted the money. And the person at the bank and him, they didn't get along at all. They would always quarrel, and my client would be cursing at him and everything. And I said, you can't be like that with the banker. I mean, this is Bank of America. He's holding all the cards. You owe him $1.5 million. You better pay that. And so finally, I got him an unsecured approval for a credit line to pay off Bank of America's credit line. And guess what happened? Okay. No. The bank, they called me. This took a little while to get it done, because, again, he didn't want to cooperate. They wanted audited financial statements. He didn't want to spend the money with his accountant. And, this guy had a business that was making, $500,000 a year profit, 160,000 square foot building in Los Angeles, and, had a multi-million-dollar, loan on it. So what happened was the bank calls me. We're, getting ready to order loan docs, and they said, Steve, we got a problem. What's the problem? Your client, his credit score is in the 5s. And this was just a couple of years later after I got him up in the 7s. So, well, why is it so low? It was just 7 when you pulled it, the last time before. And they said, he's got 6 mortgage lates on his house. I'm thinking, 6 mortgage lates? How could that be? So, and I did the home loan on his house too, by the way. So I call him up and I said, we got a problem here. The bank just called me and they're saying your credit score is back down in the 5s. And didn't I counsel you on this, a couple years ago? And, I did all this work and we got the score up into the 7s. And now you're back in the 5s. What's going on here? And so he tells me, well, I always pay my mortgage on the 29th of the month. I say, why do you do that? It's due on the 1st of the month. And he says, well, this guy, he's in China a lot. He does a lot of exporting of raw materials on the side. So he's always going overseas. And he's a control freak. He wants to do everything himself. He doesn't delegate to anybody, even though he has 100 people working for him. So what I found out is he's making a phone pay on the 29th of the month, but he's in China. So by the time it hits the account over here, it's showing, the next day. So it's showing as a 30-day late, where he thinks he's paying it, one day soon enough. Well, he couldn't do anything about it. And why? The guy had plenty of money. He could have put his thing on auto pay, but no, he wanted to do it himself, write the check, or do it over the phone. And because of this, he screwed up his credit, and then there's nothing I could do. And he argued with, the lender, the mortgage company, and they wouldn't change it because technically he was late. So even though the guy had lots of money. So because of that, and he was still fighting, with B of A every day, I got him, a private loan approved for his unsecured line of credit. And then he said, "Oh, I'm not going to take this loan. The rate's too high." I said, "Well, look at your credit. You got, credit score in the 500s. You were in the 7s. You're not going to get a bank loan now, so take the damn deal and be happy." "No, you get me that bank loan." I said, "I can't unless we fix your credit, and that's going to take time. You don't have time. You're already 6 months overdue on this loan, and Bank of America is on your case. They want their money." So they kept fighting, and lo and behold, what did Bank of America do? They ended up getting a receiver. They put the guy in bankruptcy. He had a personal guarantee. This is a personally guaranteed loan because it was unsecured. This man ended up losing everything, and he had a net worth of at least $15 million. They took his house. They took his building, which was worth $8 million. They sold the note to a hedge fund. The hedge fund refused to deal with them. And even they took his car away from him. They put 100 employees out on the street who I had done a lot of loans for. They all had good jobs. Well, now they're all unemployed. And they took his car keys from him. The car was registered to the business. They even, as he was walking away, the guy for the receivership said, "Whose phone is that?" "It's my phone." Who pays the bill?" "Well, the company, of course. Give me that phone." So they took the phone out of his hands. And this man, he was 62 years old at the time. He had young children. He married late in life. And so he had kids that had everything, had nothing in literally one day because he was stubborn. He didn't, listen. And I mean, that's, where credits can come into play. So again, you try and help people. Some people listen, some people don't. So it's just a story that, true story. I feel so bad, but, it was just out of my hands. So anyway, moving on. So the assets of the borrower, like a bank, they want to see usually a couple of months of money in the bank to make sure it's seasoned, well seasoned. We don't care. As long as we can verify you didn't make the money on your last drug deal, or you brought in a suitcase full of cash. And I've had, a number of people want to do that, bring like $100,000 in the escrow, or, bring it to me. I said, I don't want it. And so as long as the money's legitimate, and I've literally, I had a guy, he worked for 7-Eleven, and he had so many, just a normal cashier at 7-Eleven, he literally had, I want to say, $7 million properties in his name. And he was from the Middle East, and they were funneling money from, it was like Algeria, to him to buy these properties around him, and he was trying to buy this other property, and I'm thinking, how do you have $1 million in your bank account and you're a cashier at 7-Eleven? So, there was really no explanation, but they were trying to money launder. So, as long as we can make sure that the money's legitimate, we'll consider the loan. But don't bring me a big case of $100 bills. I don't want to see it. Okay. Moving on. What kind of properties are used as collateral for private money loans? Typically, most private money loans are done on non-owner occupied properties for business purposes only. A few private money lenders may do a loan on a primary residence if the loan is going to be used for business, not personal use, but this is an exception rather than the rule. Who knows what a business purpose only loan is? Anybody? Okay, so a business purpose only loan, it's where you're going to use the money for a business purpose, meaning if you come to me and you want to refinance an investment property, but you're going to use all of the funds to pay off $50,000 in personal credit card debt that you've accumulated over the years, that's not a business purpose. That's personal use. And so as a private money lender, we're going to stay away from that loan because the laws are very tough when it comes to that. And if we have to foreclose and we have to take you to court because you've used that money for personal use, even though it's a business property, we're going to lose. The judge is going to say, you knew this was a personal loan, and we're just going to wipe out the loan. So that's why it's very important that, the loan is for business and not personal use. Yes?
Here you go.
I have a question. What if you have a business credit card that you use for rehabs, and then you wanted those paid off so that so that the credit score could go up, and then you can refinance or whatever. So that would work.
That's
it's
fine.
a business credit card.
Yeah,
Okay.
It could be for paying off credit cards as long as the credit cards are related to business usage and not personal use. If you just took a family vacation to Tahiti and you spent, 10 grand, and now you want to pay that off, that's personal use. But like she said, if you rehab the property and you put it on the credit card, that's fine because that's a business purpose. It could be your name as long as you could document what you used the money for, then that's fine. Be careful what you say to your private money lender. Yeah, right. Private money loans can be done in SFRs, multifamily, commercial, mixed use, industrial, self-storage facilities, mobile homes on land. I do mobile homes on land, even though Andy doesn't believe that, but I don't do them in parks because, I don't like the collateral. But hotels, motels, and even raw land. So, so we're open to different types of collateral, and as long as there's some equity, we'll consider it. Okay. Terms of a private money loan. Private money loans are typically done for a period of 1 to 5 years, but some are done for even shorter or longer periods of time in certain cases. Rates, I've seen them as low as 5%. That's usually from a family member, when they're that low. And I've seen as high as 15%. Well, we've seen some deals, at the club going at that rate depending on what the collateral is. And points can be from 0 to as high as 5 points. If you had a deal 100% or more LTV, they can be a little expensive, depending on loan to value, property type, location, credit, and financial strength of the borrower. Yes?
Steve, I had this question early on, and I'm pretty sure some people do in the room as well. What are points?
Okay, points. That's a fee that the lender charged to originate the loan. So if you get a loan for $100,000, 1 point would be $1,000, 1% of the loan amount. And a $200,000 loan at 2 points, that's going to be $4,000. Okay. Okay, what are the benefits of getting a private money loan? As we talked about, private money loans are normally easier to obtain than typical bank financing, requiring less documentation. Private money loans can usually be closed in much less time than traditional loans. They can be used for borrowers with credit issues, again, or property condition issues that banks will not accept. Borrowers with no social security number, no employment status, or no official residency status in this country may still qualify. And private money loans tend to have no prepayment penalties. Private money loans may sometimes have better loans than the bank loans, and sometimes can cost less than when commercial loans are involved. Yes, sir.
I don't need that. So since when have there been no prepayment penalties in private money loans? They're a lot more frequent than in a bank residential loan.
Yeah, I never charge prepayment penalties in my private money loans. I figure, if somebody's paying me and I don't have to chase after them, I'm happy. They could pay whenever they want. And I've had people pay me off in 45 days, and then, some of them have gone on. I've had people on the books for like more than 10 years. They're good payers. We just extend them. And I even bought loans from, other people that they were well-seasoned, low LTV, great payers. And, that's my philosophy. There might be some lenders out there that might charge, but I would never. And also, it's illegal to charge prepayment penalties on owner-occupied properties. So if it's owner-occupied, you cannot have a prepayment penalty. If somebody's trying to charge you that, that's illegal.
How friendly would you be with somebody that paid you off in 45 days so you could make nothing for your time?
It's okay, because the person I did it for a really good realtor partner that I deal with, and she ended up double-ending a deal, and if it wasn't for my loan, she wouldn't have made the deal. And the house she sold their house for $1.6 million, and because they bought another house first, and they didn't have enough, money until their home sold. And so I said, let me give them a swing loan, and then their house sold right away. And so they obviously paid me off right away. But it created a lot of good karma with the realtor. So it's not always, about money. It's sometimes other things. Okay.
A little bit of a safety issue.
Oh,
Remember I said something about this mic coming down earlier?
Maybe I jinxed Rich. I said too many good things. And then on commercial appraisals can be very expensive. Sometimes they're like $5,000. You might have to do environmental. That might be another $2,000. We have basically a staff appraiser. It might be $2,000. So a lot of times we could save money there. And there are some reasons why you should not get a private money loan. Private money loans may be too short-term in nature compared to long-term bank loan. Private money loans may not be beneficial as borrowing from friends and family. I've had club members come to me and want to borrow, and they don't want to pay any interest, they don't want to pay any fees, and they want to borrow 100%. And I said, where are you getting money at those terms? Well, my Uncle Joe, he's got a lot of money, or Aunt Mary, and I said, well, that's great. Then continue doing what you're doing, because, if I lend you, 100% on a property, I'm not charging you interest or fees. What's in it for me? Nothing but the risk. So, yeah, so anyway, sometimes you can make a better deal if you know somebody personally. And private money loans may not be accessible when getting a loan on a primary residence, as we discussed. Private money loans may require more record keeping for the borrower when it comes to refinancing, as a bank will want to see canceled checks or bank statements from the borrower for the last 12 months before approving the loan, because private money lenders don't normally report to the credit bureaus. So if you have a private money loan or in the past, or you're planning getting one in the future, make sure you pay by check or Zelle or some type of payment plan where you can keep records, because the bank will not normally accept just a mortgage statement from the lender saying you paid on time, because they figure, well, everybody's going to say that so they can, get the loan with the bank. So you have to have 12 months of good record keeping, for that to occur. Yes? Yeah, because it'll show on your statement the Zelle payment. So as long as...
What was the question?
Sorry, okay. Steve. I'm sorry. So basically, when refinancing out of a private money loan into a bank loan, the bank's going to want to see a payment history, because private money lenders normally, they don't report to the credit bureaus, and they want to see a 12-month payment history. So if you pay, you could show canceled checks or bank statements or Zelle or some other method that you could show that the money went through at a certain time every month in a certain amount, and so they'll use that as documentation to approve the loan. I wouldn't normally do like even a cashier's check. Sometimes that can be a little risky, but wire transfer or something where it shows on your bank statement. Definitely don't pay cash. If you're getting a loan like that and you pay cash, even if you get like a handwritten receipt, the banks aren't going to accept that. So it has to be something that can't just be, put together like at the last minute just to satisfy a bank condition. Okay, what do you want to do next? Talk to your financial advisor, CPA, before moving forward to see if a private money loan is right for you. Get referrals from other borrowers who have used a particular lender in the past before moving forward. So that's a great thing, talk to your friends, your relatives, business associates, find out who they use and compare. You can always shop around, and you may get a great offer from a lender. It doesn't always mean they're going to close the loan. Even private money lenders, they don't always do what they're going to say they're going to do. I always, if somebody comes to me, I'll tell them, yeah, I'm going to do the loan. I'm going to do the loan unless there's like some fraud or something or there's something on the prelim that is a real problem. Yes.
Yeah, with Angela and I, with kind of what you were saying there, is in the beginning when we first were dealing with some what we thought were reputable hard money lenders, private money lenders, we would get to the signing table and we're closing in 2 days, and all of a sudden there's two extra points on there and the rate's different. Entire deal's totally different. And this isn't one massive company. This is a smaller company, et cetera, and we're signing there in a restaurant somewhere, looking at it like, crap, we're going to lose this deal, or I feel compelled to sign. So we would sign, hold our noses, do the deal, and then and then get out of it later because maybe it was a flip or something. But that happened more than a few times in the beginning, and it was extremely frustrating. So when someone says, I've done business with this guy, and I've done this, or this guy is, or this person, or Steve in this case, is a stamp of approval, that says a lot, because when you're trying to do something last minute and you now have $7,000 more in costs, or even $2,000 more, or your payments $1,900 instead of $1,300 because of shenanigans. That is not fun. And so you make sure, like we say, be careful who you're in business with. And now we could say that has not happened to us in a decade, but it did in the beginning. So keep that in mind.
Yeah, and that's a good point. If I quote somebody something, I'm going to stick with it. I mean, doesn't matter. Even if I'm going to lose money in the end, I would rather stick with my quote than, oh, well, I'm going to have to charge you like an extra point at the end, because guess what? The word gets around. Nobody wants to deal with you anymore. You do things like that. It's like any other business. Your reputation is everything. And, like for me, I got to stand behind what I do. Other people, they don't care. They want to get a deal done. There was a deal I got referred to the other day, and I couldn't legally do it because technically it was a owner-occupied deal. And so, but another private money person did it. They didn't care. There was equity. The borrower was elderly, didn't have any income. I mean, all the reasons why they shouldn't do the loan, but it was a short-term loan, and they wanted to, make some extra bucks, so they did it. But you know what? I had a pass of it. So it's like anything else. You got to have some ethics, whatever you're doing. So, anybody have any further questions?
We actually don't have time for questions right now.
No problem. I know.
So, if you do have more questions, if we have time after Goodwin, then we'll do some Q&A. If not, will you be here after?
Yeah, I'll stay here after. And just real quick here, if you look up here, these are just the main items if you want to move forward with the loan that we ask for up front. Sometimes we only need them because, like on taxes, we want to verify that you do file taxes. We don't always utilize the income to qualify you, but if you and we've made loans for people who haven't filed taxes in several years, but at least we want to know if they have or not, because it could make a difference. They might get a tax lien later on or something. So anyway, that's it. I know I went a little over, but I hope you enjoyed everything, and I'll stay over later. And for you new people, you've got my newsletter. Feel free, give me a call. I always offer free consultation, free education. If you just want to run something by me, I might save you a lot of trouble because I could guide you in the right direction. You may think you could do something and you can't, or maybe you don't think you could do something and you can. So anyway, call me if anything like that comes up.
Awesome. Thank you so much, Steve. Thank you. All right. Well, we're going to get Goodwin's presentation up here here in a minute, and then he'll get started. If anyone has a question, raise your hand, and I'll bring you the mic, and that's a lot easier at that point. Do you really have one, Wayna? Okay. Like right now? Yes, you may. Yes, you may get a glass of water. No, I'm just kidding.
But I don't know. This is for Steven, so I don't know. Okay. For private money loans, is there typically a down payment, or is that what points are for?
Mic drop. I think it was a different type, but. No, you miss karaoke, so. We might one of these Wednesdays between, throw some karaoke songs, and I mean, we have all the same equipment, right, Steph? I vote for Rafa and Steph to do their song. That's all I'm gonna say. Oh, Gretchen, you have a question?
Where is he? Oh, there you are. I'm curious, your lenders. I know I've heard so much about foreign investors coming into our country to do these kinds of things. So, for Peak Finance Company, are your lenders mostly from our nation, or are they from foreign countries? I'm just curious.
Yeah, everybody that, well, first of all, Peak Finance on the conventional side, because those loans are made with our own funds. We're called a non-depository bank. So we don't have our own deposits, but we borrow money on a warehouse line, and we use that to fund our loans, and then we sell them in the secondary market. Now, what you're referring to on our private money side is, well, all the people that put money with us, they're actually all California residents. We don't take any money from overseas. We don't even take money from people out of state unless they're going to buy the whole loan from us and service the loan themselves, which we'll do. Normally, most of our loans are what we call multi-lender transactions, where we have more than one person on the loan, so that requires a servicer with special requirements, so we have that. But if one person has a lot of money and they want to fund the whole loan themselves and they want to service the loan themselves, then we'll go ahead and, they could be out of state then, and we'll let them service the whole loan and fund the whole loan with their own money. But yeah, typically they're all going to be residents of the state.
Good questions. So I guess we did have time for a couple of questions.
Okay, so I have a question for Steve. Steve, how long have you been in the business? 2024 will be my 42nd year. Okay, so Steve obviously has a lot of experience, a lot of knowledge. Let's give Steve another hand for what he shared. So, I, on the other hand, and I'll do a brief introduction about myself. I probably have been doing lending for maybe 6 or 7 years, so not quite as long as Steve. And whereas Steve is also licensed, I am purely a private lender. Okay, and my previous work history has been over 40 plus years in IT. I've worked with different companies, taking them up to the Fortune 500 level. And the presentation that I'm about to give you is geared towards that kind of level because they don't have time to read through stuff. They basically need to know things very quickly. So let's go through this. Scoot over. And by the way, I knew essentially about 1 a.m. this morning that Steve had a presentation and I didn't. So I had about that much time to go ahead and get something prepared too. And that's so those of you who have seen my presentations before, you know that I put a lot of thought into them, and this one I did too. I had a feeling that I was not going to have a whole lot of time to do anything. So this is going to be pretty short, and I will make it as simple as possible. Okay, so we're a little bit more sophisticated than just a little stick man. So your left or my left? My right. Okay, so some interpretation. I'll provide this. You can ask questions as you come along. So feel free to go ahead and ask questions, and we'll try and get a mic to you as well. That little guy with that tiny little bag is you, the typical borrower. Isn't that right? You're going to go ahead and try and buy a property, and how much money do you have? Who in this room can put down 100% cash for their purchases? Raise your hand. Okay, that's two more hands than I expected to see. Right. Okay. So this is most of us, and myself included too. So we're going through and just to describe the institutional process. Okay. So you basically think about how you're going to go ahead and get this money. Okay. Remember, you're going to go to an institution. What does an institution ask for? Steve put all that stuff on the very last slide, and I don't know if you guys in the back could really see that, but it said W-2, tax forms, and whatever else, right? Okay, so you come up with your Plan A action, and what does that typically look like when you go to the bank with all your paperwork, or you're on that phone call with the loan processor, and how does it look like, or how does it actually play out in your mind as opposed to how it looks on the phone? Yeah, that's pretty much it, right? You beg, you ask for forgiveness, you say, what do I need to do in order to go ahead and get this loan done? Okay, and they kind of give you some hints, but they really want to draw it out of you, and that's sort of what it looks like at first. Right? I mean, you know, overall in the process, this is kind of how it feels. You do all these things and you think you've done more than enough, and then they ask for more. Okay, and all that just to get to this point. That's right. And your second and your third, or you borrow somebody else's and you do something else, right? Okay, so all right, so look at that. Less than 5 minutes, and I've already done half the presentation. That's institution. Okay, so how many hands think this is accurate? Yeah, pretty much, right? Okay, now I'm going to summarize private money lending for you in pretty much the same way. Okay, that's still you. You still have no money. All right, that hasn't changed. Okay, and you're going to come up with some ideas on how to go ahead and do this. But you actually have someone who is working with you and working for you, because to an investor, they want to see you succeed. And very much how Steve said that together we teamed up on a deal to help another investor. Let me talk a little bit more about that particular deal. Okay, so Steve mentioned some details. Originally, it was going to be a $100,000 purchase. Steve put up $75,000. This person had $15,000 skin in the game. Okay, now don't whip out your calculators all that quickly. I'll tell you that, yeah, they're still a little bit short, right? Okay, $10,000 short. So he was talking to me about that deal, and I reminded him, okay, how much did he want this deal? And he said he really wanted. He thought there might be $20,000 in equity in it, and that he'd be able to go ahead and force the appreciation, maybe look at building something on it and then raise the appreciation that way. So those of you who attend our exchanger session, also our creative finance session, you will always hear us say that if you do things by yourself, okay, you have 100% of a deal that doesn't get done. What do you really have? Nothing. Okay. If you got 90% of a deal, you have 90% of a deal that you actually got done. Doesn't matter what that additional 10% cost you or whatever that difference actually cost you. Okay. When you look at the cost of acquisition versus the cost of not getting anything done, anytime you have forward progress, you are moving forward. Anytime you're standing still, you are losing ground. Keep that in mind. Okay, so for that $10,000, for what we thought was going to be maybe $20,000 in appraisal, as you heard Steve say, it actually came back at $200,000. Right, good deal. More than just a single, more than just getting on base. That literally is a great deal. He didn't know it, we didn't know it, but it turned out to be a great deal for everyone. So how does it work for a private money lender? Okay, we look at collateral. So do we ask you for your W-2s, your tax returns, other things like that? No, we look at the collateral that you want to acquire. So for that particular collateral, does it make sense for us to go ahead and lend against it? And if we can't lend against it, can we lend against something else so that way we are more secure so that we can use those funds to do that acquisition? So do you have other assets that maybe are paid for in order to go ahead and borrow that money? This is what we look at. So it could be the collateral that you're trying to acquire. It could be other collateral that you have. You heard Steve talk about cross-collateralization. So we can do that, and that's a good technique to have. We can do it against a single piece of property, and it doesn't even have to be property. So those of you who have seen us in exchangers, do you have equity in a car? Is that car fully paid off? Do you have something else that we can use as collateral? Okay, what else could be collateral? Yeah. So do you have stocks? Do you have CDs? Do you have anything else that we can go ahead and use as security? Those are different things that you can utilize. Okay, we don't ask for your kids. We have our own and we have enough. So oftentimes in our exchanger and creative finance session, we talk about using the financial calculator. Andy's the one that teaches that class. And when you watch the exchanger sessions and you see the deals that are being done, you will see that people are using that calculator. We make sure that we are doing the offer that works for us. And when we make an offer, oftentimes because of our knowledge based upon this education and training and continual use of these techniques, then we know where that offer really works or not. Okay. And at that point, if the deal makes sense, then we fund it. It's pretty much as simple as that. We don't go through a lot of additional paperwork. We do look at proof of ownership. Do we have insurance on that property? Do we need to have insurance on that property? Do we need to be secured against that property directly? We look at those things, different things as well. Okay, and at the very end of it, yeah, you got your money and then some. And now, who has been to Pete's session from last year? A lot of you, okay? Pete often talks about making those financial friends and allies. You have an investor who is working with you. What is the likelihood that you will work with this particular investor again? You help them actually accomplish something. You together with a potential team have actually accomplished something. What is the likelihood of you again helping each other or doing the same thing with other people in your network? Okay, Whoever is a lender, please raise your hand and keep your hands up. Okay? Take a look around. Anyone who has done any lending previously, this is where the money is. Okay? Now, they don't always have money. All right? So in my conversations, I've mentioned to different people that I'm a poor lender. Not because I don't do things right, but because I lend out everything that I have. And probably twice in the past 6 weeks, I've been able to get that dollar amount. So the dollars available across 3 different IRA accounts. This is just my own IRA accounts, down to less than $8. Less than $8. Okay, with one person on a deal that I'm working with, he is at 15 cents. Another person is at 75 cents. Okay, this is how your money should be working. As a private lender, you always want to keep that money working. Okay, because when that money is working for you, you don't have to be working for that money. And when you get those payments in, who was at Exchangers today? Over half the room. All of you should have seen me put up, okay, for Steve, I have to put this in context because the other half, you didn't see this. Steve puts up $625,000, right? Steve has money. Oh, and Steve is a great lender, by the way. Don't get me wrong. Okay. And I came up right after Steve, and I said, I have 600 also, but it really is just 600. Yeah, I actually got some payments in, so I had to try and find a way to get it working, right? What do you often say, Andy? when you have a few $1,000s, that's right. Right, because you want that money working, because that money just sitting there is earning you nothing. That's right. It's okay. So now we conclude my presentation, and this is you afterwards. Okay, so now we have time for questions. And now Steve can come up and we can help answer questions. This is actually a new app that I'm trying out for the first time, and it didn't have everything that I wanted, but it had enough. So I hope it kind of conveyed the essence of the ideas I was trying to explain. Well, it's actually supposed to be smoke coming out of the chimney. Okay, I won't go there. Sketch Wow. And this is the first presentation that I've done out of it, and unfortunately it doesn't export the actual results, so you actually have to run it on a system that has the app installed on it. That's why we had to go ahead and use my laptop.
Yeah. Good win. Good win. Good win. I didn't get the crowd going. We could have got him to do a lot Macarena.
Go ahead.
It is now January 3rd. When you asked who in the room has money to lend, why didn't every hand in the room go up? Because every one of us should have at least $6,500 today in our self-directed IRA, because we had yesterday to fund. So you should have all had your hands up, and you should all have at least $6,500 in your self-directed Roth retirement funds. So shame on y'all.
So on that note, who is interested in private lending? Yeah, more hands should be going up. Okay, so we had this conversation over lunch because today is the first full day of us doing all day in the fire center. And so after exchangers, we went off to lunch and we had this discussion. Okay, so what do you want to go ahead and do? Okay, what works for your particular situation? And one of the outcomes of part of the discussion that I had was, are you truly an investor when you do things in real estate that you don't actually keep the real estate? So are you an investor or is that a job? Is basically what I'm trying to get to. All right, it depends. Okay, so those of you who think you are in real estate and you do these things and it turns out to be a job, look at what that is going to take out of you. Okay, are you truly an investor? What is your goal? What is your takeaway in going through and doing all that work? Okay, find things that work for you. Find things that work for your particular situation. Okay, talk to the members of the club. See what their different takes are, because everyone's going to look at things a little bit different, all right, based upon their experience, based upon their knowledge, based upon the education that they've taken. Andy has taken many, many years of education from a lot of different people. To a certain degree, I've done the same thing. So in the 6 years that I've been doing lending, hopefully I've been progressing. I'm nowhere as knowledgeable as Steve is, but I know enough to go ahead and help grow my own IRA accounts. And I know enough to be able to help other people grow their IRA accounts. And I'm confident enough to offer my help in getting other people to learn how to be private lenders and learning more about how that process works. Okay? Question, Farah?
Yes. Since this is the rental focus group, as a borrower looking to buy a property, what advice could you give someone like me that I'm looking for, say, the down payment or money for repairs, and go to a lender? Like, what does a lender want? What should I be presenting? Do you have like a ideal package that you look for? That type of thing.
Let's see if we can get Steve up here so he can help answer some of these things too.
And then again, if you guys have a question, I'll come to you with the mic.
I want a piece of the deal.
Okay, so
They're ready to talk.
when it comes to acquiring the funds, there are some lenders that they're going to be more aggressive than others. They might finance 100% of your transaction, and they may even finance, part of the rehab, maybe all of the rehab, but it's going to come at a price. The more risk the lender takes, the more expensive the loan gets, the more points they're going to charge. And for us, we like a little bit more documentation up front, but once we get what we ask for, the process is going to go very quickly and smoothly, and then we can make a decision right away. We never want to backtrack, because we didn't ask for anything up front, and we give a quote, and then we find out later that the deal is not as presented. So that's why we like to get a little more info. I mean, we actually do ask for tax returns, and mainly to see that people, like I said, are filing and aren't behind by, let's say, 5 or 7 years, because then we have to look at, hey, this person's eligible for a tax lien, and do we want to be involved in, a transaction, where the IRS is going to come down. And I'll make this really quick. We had a transaction where we took money on the lending side from one of our clients, and this lady had been, investing with us for many, many years. but we found out, the loan was funded and everything. We find out later that this lady hadn't filed taxes in like 7 years, and she was, older. She was in her 80s, and the IRS actually put a lien on the property. So we ended up taking it back in foreclosure, one of the few that we've had to take back. But then the problem came up: how do we get rid of this IRS tax lien? And we asked the lady, well, why don't you file taxes? You know what her answer was? I don't work for a living. And it's like, well, you make a lot of money because she had like $1 million invested with us. So she's getting huge checks every, month. She never reported a dime of that to the IRS. And so the IRS, I guess, they have their ways of finding out things. And sure enough, they see her name, because we have to put everybody on the deed, and they put a lien on the property. It literally took us 5 years to get the franchise tax board to get rid of the IRS and the franchise tax board liens. We had to hire attorneys. We couldn't, we had a buyer for the property, so we literally sold the property, and they were paying us basically rent because we couldn't transfer the title until we worked out a deal with the IRS and the franchise tax board that they would, when the transaction closed, we would, all the money that was intended for this one lady, we'd give it to, the taxing authorities, and they give us a release so we can sell the property. But we never thought that we'd have a situation like that, and it wasn't from our borrower, it was from our lender. And so 5 years later, and we lost because we sold the property at the agreed upon price 5 years ago, and obviously the property was probably worth double by the time we sold it. But we stuck to our word, and but that's one of the reasons why we do require information like that.
The question is,
Oh.
what if they want a loan for rental property? What do they
Okay.
need?
Probably the best loan would be what's called a DSCR loan, which is short for debt service coverage ratio loan. And basically what that is, and this is an institutional loan, we just look at the credit. If it's a purchase, then we look at what the potential rent would be, even if the property's vacant, what the appraiser says the property will rent for, and then as long as they have some reserves. And that's a really easy loan to acquire because it doesn't look at anything else. It doesn't look at your other assets. It doesn't look at your taxes. It only looks at the property in question and the potential rent of that property. And even if it's not debt servicing, like usually 1-to-1 debt service coverage would be for every dollar of rent, it would cover the mortgage payment. Well, if the rent only covers 75% of the mortgage payment, including taxes and insurance, you could still get a good loan on debt service coverage ratio. So it's a great institutional program, and again, it requires very little besides just having decent credit and reserves after the close, and showing that the property will at least cash flow 0.75 to 1. Yes.
So 2 questions. Don't know how much it will apply, but creative financing. If we start getting deals that we're doing some sort of creative financing, taking over the seller's mortgage nowadays, was that something? And then is that something that you would have a sub-servicing that we could get to? Like if it's free and clear and the seller says, you can have 0%, pay me over 40 years.
Yeah.
Can we talk to you, be like, hey, we'll pay you a couple points for the debt servicing, right? So that way the seller, because he's not a bank,
Yeah.
he's not that.
Right.
Can
No,
we just
there-
negotiate
yeah,
that as a trustee?
We don't we won't service other people's loans, but there are companies. There's a company called FCI. They're a huge servicer out there. There's other ones, and if you have a seller transaction carryback, they'll do it. They'll service it, and they're very good. They've been around a long time and very big company.
Perfect.
So yeah,
I'll email you on that one. Just to
right,
get
and
their
there's other
contact.
ones, like that. Now, what we will do, and I've done this with seller carrybacks, is sometimes there's like a gap. The seller doesn't want to carry quite enough, and you don't have, let's say, quite enough down. Well, if the seller will subordinate to our loan, we can get involved, and this way it'll let you get in maybe with a little less down than that the seller wants, because he'll get our loan, he'll get the cash from our loan, and then he'll have his loan, and he may be okay in second position. That's what subordination is, that you subordinate to somebody else because he's familiar with the property, he's still got money from the transaction, and if he has to take it back, he's that much ahead of the game, and he knows the property, and he's willing to deal with it. If that's the case, we could get involved in the servicing if we're making that portion of the
On
loan.
the first one. Thank you.
Yes.
One sec. Was that both questions? Yeah. Okay.
Okay. For your DSCR loan, first of all, do you lend out of state, like in Florida? What are your starting rates? And then also, do you create the note, then sell the loan, or do you keep loans in house like a portfolio lender, or are you a broker? Because I'm kind of confused.
Those are great questions.
Okay.
We are licensed in Florida.
Okay.
So, yeah, we definitely would make loans in Florida. And the question is, some loans we do act as a direct lender in Florida, and some we act as a broker. And so, but basically, pricing and terms are going to be similar. It's not going to be different whether, we're the lender or we're not the lender. And then if we are, obviously, we sell the loan, right away. But yeah, those are no problem.
So, like for 30-year fixed rates, what are
The rates right now they're starting in the 7s,
Okay.
and they could go probably up to close to 9 or so, depending on the deal. But remember, these types of loans are called non-QM loans, where conventional are called QM loans. The rates act different because right now the non-QM haven't dropped that much, but if you see they're expecting to lower the interest rates in the future, and I'm talking about what the Fed is doing, and if they lower the Fed funds and prime rate goes lower, the non-QM rates will go lower faster than the conventional loans. Conventional loans may not go lockstep with adjustments in the prime where the DSCR loans would. So sometimes you even see the opposite, because the conventional loans are driven by the bond market, and whatever the bond traders are going to do, that's going to determine more what your conventional loans are versus
Okay.
the DSCR.
Thank you so much. I
Yeah,
appreciate it.
Sure.
I just wanted to circle back to that earlier question about how, if you're looking at buying a rental property, how you might be able to get the money for a down payment. And I don't know if people heard, but Andy mentioned that he would ask for a part of the deal. And this is exactly what we had discussed over part of today's lunch as well. How do you go ahead and do different deals? Okay, you can ask for a certain low rate, but in an investor environment like this, some investors may not be that interested in providing a low rate loan. They're there to go ahead and make money as well. But if you combine it with part of the deal, okay, so someone comes in with additional financing that you don't have, you offer them a part of the deal, and it overall makes sense, that's one way to go ahead and find money, okay? And so I've mentioned that to at least 2 different people today, how you can utilize that technique. Now, if you're just looking for financing, okay, you can go ahead and pay for financing at a higher rate. And Steve mentioned this in his presentation as well. So he had, I think, 15% and 4 points. When I started doing my lending in the Midwest, our starting rates were actually 16% and 6 points. And then as you did more business with us, then we would progressively go lower and lower and lower. Now, 16% and 6 points sounds like a lot, but when you're doing a deal that's $50,000 or less, and you look at what the amounts are that we are actually getting as a lender, you can see that that's enough to go ahead and try and recover from a single bad loan within a certain amount of time. Okay, so when you look at very low rate loans, that's very hard to recover if you have one loan go bad. Okay, does that help answer that question?
Yes. Did you
Okay.
want to add anything, Andy? No. Okay. Any other questions? All right. Elle.
When you guys mention points, how are they paid? Are they paid up front from the person who's borrowing? Is it built into the loan? How are points paid?
I'll go ahead and field this one first. I'll say that it depends. So here's the reason why, and I'll just kind of go through it briefly. If I don't have enough money, or if I want to go ahead and spread my money elsewhere, I will deduct my points up front, and then I will put those points deducted from the funds I'm going to contribute to that loan. Now, the ideal situation would be I roll those points into the loan. Why? Because then my points will also make money. Does that make sense? Okay.
For us, typically, the borrower is going to pay those points out of pocket. Now, if we do some of these non-QM loans like the DSCR and things like that, or we do a lot of commercial loans, SBA loans, a lot of times we can roll some or all of that into the loan itself. But for our particular instance for private money, we want the borrower, to put up the money, because for me it's all about skin in the game. And the loans, we have a good portfolio, and I think a lot of that is because we don't overextend on deals, and we tend to be a little cheaper and lower rates than some other lenders, because I'm always comparing, because we're raising capital from private people have money in IRAs, things like that. And another lender, there's another lender in the group that they borrow money from the bank. They have credit lines. Well, with all the rate increases, their cost has gone up a lot, because now they're not getting money at, say, 4 and 5%. The money's costing them 8 and 9. So their rates have had to go up, quite a bit, where ours have basically pretty much stayed the same.
So this is more of something we learned, and keep this in mind, especially for newer people or people that maybe haven't done anything in a while, especially with private money, is don't get too caught up in points and interest rates. Yeah, be mindful of it. But I remember 15 years ago when we first got started, kept coming across, we didn't have, remember, the fire center wasn't there, we'd go to AREA, et cetera. And I remember one guy I saw for 3 years, he'd say, well, what are you doing? And I'd tell him, he'd say, oh yeah, I can't find cheap money, it's just too expensive. He didn't want to pay 10% or 9% and 1 point. So for 3 years he did nothing while everyone else was doing deals around him, because he got focused on what he was going to pay instead of what he was going to get, which reminds me of what Steve was telling about that client of his that lost everything because they wouldn't want to, face reality. So understand in the beginning, I think we were paying like 4 points or 5 points in the beginning on a $80,000 loan to buy a 6-unit or whatever it was, and then and borrow 50, 60%. And then later we were able to borrow at 70% or 80% loan to value, then 90%. And so that comes also with experience. So remember that, especially a newer person, if you're going to be getting into it, and that you're going to have some skin in the game. And if you can negotiate and make the deal good enough for you, good, because that's really what it comes down to be. But don't get too caught up if it's a 1.5 point or 3 points, considering what it is and for how long you're going to have it. And just keep that in mind, because it's something we've learned. And is it good enough for you to still do the deal? Then maybe you do the deal. You buy, is it a fix and flip? And you're going to buy it and fix it up, and a buy and hold. You're going to buy it, fix it up with private money, and later you're going to go to Steve and get a DSCR loan and go to a 30-year loan later after it's fixed up. Just look at the overall cost, and does it make sense for you, and then decide. If you're not sure, ask one of the other people here that have done this before, been around. Be glad to point you out and say, yeah, that's a good deal, or no, or maybe it's a little high, but this is your third deal, and that's fair. Because remember, we're all in this trying to get a little ahead at the same time. Learn and know that we're going to make money, but it's going to cost some, and that's still okay. Just wanted to leave that.
All right, and we only have time for one more question, and I did tell Rob that he was going after Evan, and then I'll wrap up. So here you go, Rob.
Thank you. This is, I think, for Goodwin and Andy. When you're talking about a scenario where you're looking for help with the down payment on a rental, you mentioned, you want part of the deal. Can you give an example or two what that could look like?
Yeah, I can go ahead and touch upon the deal that Steve and I did as an example. So I made up the $10,000 that was going to make or break that deal. And we had to make sure that it could still cash flow in the meantime. So I did, if I remember correctly, my loan at 10%. Okay, and those of you who know me know that I don't do 10%, okay, because I'm an investor. So how do I do this deal? Well, I asked for part of the deal. So I asked for an additional percentage of this deal that could be cashed in at the time of the sale, or as an option to go ahead and pay me off at a certain amount of point in time in the future. So that way, if you wanted to keep the property and therefore I would not be able to go ahead and get my portion out of it at some point in time, he was going to keep it, he could buy my option out. Okay, so those are different ways to go ahead and realize the return that I want that works for the situation of the borrower at that point in time, and flexible enough to allow him time and additional time and more time if necessary. Now, if I wanted to go ahead and get money, but it was not appropriate to work with that investor at that point in time, I could also sell my option to somebody else who now has that luxury of time and now has that potential investment. And I can now use that money for other purposes. Okay, so this is what we talk about from a creative finance standpoint. There's different ways to go ahead and structure a deal.
And I'll talk about a different one. And I've got several of these nationwide where I've been in an exchange meeting and somebody needed the last chunk of cash. And to get it, I was willing to put up the last chunk of cash, but I want some percentage of the net on that house forever. So I did one that pops to mind. I think it was $40,000 that went into the deal. I think the whole purchase and rehab and acquisition was 65 or 70. You remember the numbers, Goodwin? I think you got a piece of that one too.
Yeah, I don't remember all the numbers.
Yeah. So, but what we get out of that is 40% of the net. So every quarter she writes us a check for 40% out of whatever it made, and when she decides it's time to sell it, we get all our money back, plus 51% of the upside, because quite frankly, I don't want her to sell, and I want it to be painful for her to sell, because The reason I got this, and it's in one of my retirement accounts, is because I want a regular check that my grandchildren will enjoy after my daughter passes away. So long term, to me, that's an inflation hedged investment.
All right, thank you. Give them a round of applause, you guys. You guys are getting sleepy. Thank you, guys. And I wanted to bring up, if you guys are interested in private lending at all, Goodwin is going to be doing a class here at the clubhouse in March. So look for that one coming up. And then in February, how many of you have kids 5th grade through 9th grade? Or sorry, yeah, 5th grade through 12th grade? 9th, sorry. I'm the only one? Okay. Or you have friends, nieces, nephews, anybody like that? Grandkids. How about grandkids? 5th grade through 9th grade? There we go. We got a couple hands. Okay. So we are doing a class for the littles with Lenny. He calls himself Lenny the Boss. So it's financial literacy for kids, and then that will be next month. So look for that as well. All right. Thank you, everyone, for coming. They will be here if you have more questions, and then we'll just do some open networking after Andy tells me what I forgot. And Andy has his class at the end of the month. I was talking about the club events, but yes, you also have your Wizard Complete at the end of the month on Zoom. All right. Thank you, everyone, for coming, and you can hang out as long as we don't kick you out. Have fun.